Hello, everyone. Thank you very much and welcome back. We are discussing today an exempt income. We will discuss all items of the income which are exempt for the taxable persons one by one. Let's start the discussion. Oh, sorry for this. In our previous lectures, whatever we have discussed till now, we have discussed overview of corporate tax law. We have discussed resident and non-resident taxable person. Here we have discussed scope of the corporate tax law. Then we have discussed exempt persons, out of the scope person, UAE sourced income, permanent establishment and its history, then corporate tax registration, application of corporate tax on the partnership, application of corporate tax on the free zones, application of corporate tax on family foundations and trust, how to compute taxable income and unrealized gains and losses on assets and liabilities. These are the items that we have discussed till now. As I discussed earlier, that we are discussing today corporate tax, and we are discussing specifically exempt income which is exempt from the corporate tax. Exempt income, this is our 12th lecture. Before going to the discussion of exempt income, we need to understand that we have classified the person into three different categories. These three different categories were exempt persons, out of the scope person, and taxable person. This wording is very important here. Exempt person. We are not asking exempt income. We are asking here exempt persons. Means person itself is exempt. Now there is a taxable person as well. So these persons are exempt. These persons are taxable. The taxable person, they will have some sort of taxable income. They will have exempt income as well. So we should not mix the exempt person with the exempt income. First of all, we need to segregate. They are taxable person. These are exempt person. Exempt person itself are exempt from the UAE corporate tax law. We have discussed that 8 persons which are exempt from the corporate tax law. You discuss a taxable person. The taxable person might be the taxable person have exempt income, might be they will not have exempt income. Whatever we are discussing right now, this is the exempt income of the taxable person. These taxable person may be a resident taxable person or might be non-resident taxable person, but we need to look into this exempt income from the taxable person's point of view. So we need to be very clear regarding exempt person is a different thing and exempt income is a different thing. Exempt person that will discuss the government entity, government controlled entity, person engaged in the extractive business, persons engaged in the non-extractive natural resource business, qualified public benefit entity, qualifying investment fund, public or private pension or social security fund. These are the persons that we've already discussed. These are the exempt persons. We'll further discuss. These are by default exempt from the UAE corporate tax law. These persons will require the approval from the respective authority to be declared as the exempt from the UAE corporate tax law. Exempt income, as we discussed, the taxable person might be a taxable income, might be exempt income. So this is the exempt income and it has been given in the Article 22 of the corporate tax law. First of all, they are asking dividend and other profit distributions received from a resident juridical person. This word is very important. Resident juridical persons. If someone is getting dividend, if someone is getting profit distribution from the resident juridical persons, it will be exempt from the UAE corporate tax law. Dividend and other profit distributions received from a participating interest. We'll look at the participating interest in detail. This required minimum at least 5% shareholding for an interrupted period of 12 months, and the income should be subject to tax at least 9%. We need to look into this in detail. So you can say if the dividend or other profit distribution are being received from the foreign juridical persons, the non-resident juridical persons, non-resident juridical persons, it will be exempt from the UAE corporate tax law. Any other income that pertains to the participating interest, any other income that pertain to the participating interest, that income will be exempt from the UAE corporate tax law as well. So we'll discuss in income in detail. Then they said income of foreign permanent establishment. It means if the local company, UAE resident company has a PE out of the UAE, and that PE income and related expenditure can be exempt as well, and they can opt for exemption. These are subject to certain conditions. And fifth is income derived by a non-resident person from operating aircraft and ships in the international transportation. If the same exemption is available to UAE operators of aircraft and ships in that territory or in that jurisdiction or in that country. So these are the 5 categories of exempt income. So as we discussed, these are the exempt income of a taxable person. So when the taxable person will be calculating accounting profit, definitely they will be considering all these income. And once they are considering all these income, we need to make the adjustments to arrive at the taxable profits. So we'll discuss all these 5 different classes of exempt income one by one. Well, this is just exact. I have just taken a screenshot of the wording of the law, Article 27, Chapter 7, whatever we declared. This is the same thing that we discussed in the previous slide. A dividend and other profit distributions received from juridical person, that is a resident person. So resident juridical person, dividend and profit distributions are exempt. Dividend, other profit distribution received from participating interest in a foreign juridical person, that is exempt as well. Any income from the participating interest as mentioned in 2, so that income is exempt as well. Income of foreign permanent establishment that meet the condition of local, basically income of the foreign permanent establishment, foreign PE of the resident person, the income that can be exempt as well, but subject to some conditions. Income derived by a non-resident person from operating ships and aircraft in the international transportation that meets the conditions of Article 25. This is the same thing that we discussed in the previous slide as well. I was just referring the respective articles, respective provisions of the law. So we will discuss all these 5 categories one by one. The first is dividend received from the resident juridical person. Any dividend received from the resident juridical person, if I'm going back on the first slide, in our first lecture or second lecture, we discussed juridical persons. These are the juridical person. These are the juridical person. These are the resident juridical person. So these are the resident persons. All these are the resident persons. Out of these 2 are the juridical persons. If someone is getting any dividend or profit distribution from the resident juridical person, that will be exempt from the UAE corporate tax law. A resident juridical person can be company which is controlled and managed from where, it doesn't matter from, but the company is established in the UAE. It doesn't matter company is established in the free zone, mainland. If the company is established in the UAE, it will be considered resident juridical person. We have discussed the examples as well that we discussed. It will be LLC, public shareholding company, public joint stock company. But the natural person, we'll just discuss the natural person. So if the dividend is being received from the resident juridical person, the second resident juridical person might be the juridical person is in USA, UK, anywhere in the world, but this person is being controlled and this person is being managed from the UAE, still it will be considered resident juridical person. So if the dividend or other profit distribution is being received from the resident juridical person, which will be company established in the UAE, company established out of the UAE, but controlled and managed from the UAE, then it will be considered that this is exempt income. It doesn't matter whoever is the recipient may be resident person, non-resident person, natural person, it doesn't matter, but we need to know for who, from where this dividend, a profit distribution is being received. I have just given this example about a USA company which is being controlled and managed from the UAE. If the USA company is being controlled and managed from the UAE, it will be considered a resident juridical person. And if anyone, suppose UAE company is getting any dividend from this USA company, this dividend will be exempt as per law because the dividend is being received from the resident juridical person. Why this is a resident? Because this company is being controlled and managed from the UAE. It doesn't matter wherever the company is. So I think we all are very clear that if the dividend is being received or other profit distribution is being received from the resident juridical person, that dividend, that profit distribution will be exempt in the books of taxable person. Now the question arises, if this amount is being received from the natural person who is conducting the business. Important thing is the natural person who is conducting the business, natural person might be conducting the business in the form of sole proprietorship, or it can be a civil company as well, which has been given in the frequently asked question. So to whom he or she will be paying the dividend. Such a natural person who is conducting the business in the UAE in the form of sole establishment or in the form of civil company, that person will be giving the dividend to himself, to herself. So dividend in the hand of the owner, dividend in the hand of the natural person, dividend in the hand of the operator of the company, it will be considered his personal income. And we know this, there's no personal income tax in the UAE. So any dividend that the natural person is receiving from its company, it will not be subject to dividend, because any personal income in the hand of the individual, it will not be subject to tax. So in the exam, so we are very clear on the first point. First point we discussed, if amount is being received dividend or other profit distribution from the juridical person, it will be exempt. If the individual is receiving, it will be out of the scope, it will be exempt because individual itself is not subject to tax. If any of the company is receiving this income, they need to pass the adjustment in their books to adjust their profit to arrive at the taxable profit. If the individual is conducting the business, individual is getting any dividend from its business, again it will be in the hand of the individual person, it will be exempt from the UAE corporate tax law because there is no personal income tax. So the first point is fine. We'll move on to the next point. In the next point, point number 2, they said if the income is being received from the participating interest, that income will be exempt as well. Income received from the participating interest, that income will be exempt. We need to look into this. What is participating interest? The participating interest is at least 5% ownership in the share or capital of a foreign juridical person as a party. In the juridical person, this is called participation. Taxable to receive at least 5% profit available for distributions and any liquidation proceeds. This is the first condition. So we said income received from the participation interest will be exempt. What is participation interest? Participation interest is at least 5% shareholding in the share capital or capital of a juridical person. And this 5% entitles the holder that the profits available for distribution at least 5% and any liquidation proceeds 5%. Second, this 5% at least being held or intention to hold at least for a period of 12 months. Second, the income from which territory, from this jurisdiction, this income is being derived against this 5%, that income is at least subject to 9% tax. No more than asset. What are the basically behind the participation? There will be certain assets, and no more than 50% of the assets of the participation are exempt if these assets were held directly by the taxable persons. So these are the conditions. Try to understand this, that you is a company, you is a company of some sort of investment out of the UAE in any company. If this company has investment in the foreign juridical person, at least 5% for continuous period of 12 months, and the income that the UAE company will get out of the UAE, it will be subject to tax at 9%. Assets which are part of the participation are not exempt. These are major conditions. Then it will be assumed that this is a participation interest. And the income, any income from the participation interest, it will be considered an exempt income. So I think everybody is clear. We'll just discuss again with detail in the participation interest. These are the conditions: 5% at least ownership, 5% share in the distribution, 5% in the liquidation proceeds, hold the intention to hold at least for a period of 12 months, 9% subject to tax assets, which are part of the participation. These assets, at least 50% assets should not be exempt from the tax. If these the conditions are being fulfilled, then we can say, sorry guys. Apologies, I'm not feeling well today. So anyway, we're coming back to participation. If these all conditions are being fulfilled, so we will say whatever the income that is being received from the foreign juridical person, that income will be exempt from the UAE corporate tax law aspect. Now, might be the income is receiving the individual, might be the income is receiving the juridical company or taxable person. If individual is income receiving the income, it doesn't matter because we all know there's no personal income tax. If this income is being received by the local taxable person, then they need to adjust their taxable profit to arrive at to accounting profit to arrive at the taxable profits. So participation interest, if exempt, then the following income shall not be taken into account. If all these conditions are being fulfilled as whatever we have discussed, 5% for uninterrupted period of 12 months, and income is subject to tax at 9% along with two other conditions, then if these all conditions are being fulfilled, then if the taxable person is receiving any dividend, any profit distribution, gain on the transfer, sale or disposition after 12 months required, foreign exchange gains and losses, impairment gains and losses related to participation interest, all these income will be exempt. It will not be considered to arrive at the taxable profits. Dividend is very straightforward. Other distribution is fine. Gain and transfer, this is for sure. This transfer will happen after 12 months for an uninterrupted period of 12 months. And then there will be gain, there will be loss on the, there can be a gain, there can be loss on the transfer. But gains, it will not be considered income. Foreign exchange gains or losses on participation interest. Initial value was 100, now it has gone to 105. This 5 will not be subject to tax. Impairment, it will not be subject to tax as well. Limitation of participation, limitation of participant interest exemption. This is whatever basically what we have discussed. This income will be exempt. We have discussed the different classes of income: dividend, impairment, gain and losses. Then we discuss exchange gain and losses, other distribution, gain on the transfer. All these will be exempt, but this exemption will not be available because there are some certain limitation. These limitations are participation is claiming deduction and expenses. If this participation, suppose the UAE company, this UAE company has an investment in UK company, at least 5% for an uninterrupted period of 12 months, and this UK income is subject to tax at 9%, it will be exempt. But if this UAE company is claiming any expenses, like UAE's company claiming investment expenses, the impairment loss, exchange gain and loss, if the UAE company is claiming all these expenses, then they will not be eligible to claim the exemption on the income. If this is basically apple to apple comparison, if they are claiming the expenses, they will be liable to pay tax on the income as well. If they're not claiming the expenses, they will not be liable to pay because it has been given an exemption on the income as well. So if the company, if the UAE's company is claiming any exemption or any deduction, then this exemption will not be available. Then the taxable person recognize deductible impairment losses before meeting, if they are deducting the impairment losses before meeting the condition. The same thing that we discussed. If they are considering deducting the impairment losses, if they are deducting the expenses, if they are considering basically any related party, they have taken a loan from the related party, any loan receivable from the participation, and on this loan they are recognizing the deductible impairment losses, then all these situations, these are the limitations, then the person will not be able to claim any exemptions on the participating interest. The further limitations, exemption not apply to loss realized on the liquidation of participation. No exemption for 2 years. This is basically initially they are asking furthermore no exemption for a period of 2 years if all conditions are not met. If these conditions are not met for the next 2 years, no exemption will be available. Second, transfer as a going concern, because we know this, we will discuss in our next topics. If the business is being transferred as a going concern, it will be business restructuring relief. This transfer will not be subject to corporate tax, and this transfer will happen at the book value. We'll discuss in our next lecture. They said if this 5% has been acquired through the transfer as a going concern, then there will not be exemption relief. Further, at the answer transfer with qualifying group, their condition within the qualifying group, if the person qualifying a part of the qualifying group, any transfer within the qualifying group, it will be at the book value, it will not be at the market value. So if this equity interest they are getting from the qualifying transfer within the qualifying group, so it will not be subject to exemption. The person will be liable to pay income tax. The qualifying group require the person is a resident or non-resident, PE of the non-resident. We'll discuss in detail. At the end of the day, if the ownership falls below 5%, we have already discussed, there should be ownership holding for a period of 12 months, continuous period of 12 months to claim this exemption. If during the period of 12 months, the equity, the 5% holding has reduced less than 5%. If it has been reduced less than 5%, then they said, and then any exemption claimed will be reversed and income will be subject to tax in the same tax period in which the ownership falls below 5%. So these are the limitations. On high level, we can say if these conditions are being fulfilled, the business can take the exemption. If these conditions are not being fulfilled, business cannot take the exemption for the next 2 years. Moreover, if the 5% is less than 5%, the business cannot claim the exemption. These are the certain limitations. If the business is claiming exemption on the income, the business should not claim, business should not deduct any losses, any expenses, impairment losses, exchange losses. This is what we have discussed. Fourth, income of a foreign resident juridical person. Let's say a resident could have a PE in another country. This UAE company has a PE in UK. If this UAE company has a PE in UK, law says this UAE company can apply to the FTA, and this applies that the income and related expenses of this foreign PE should not be considered. If it has been approved, then income as well as expenses of the foreign PE will not be considered while calculating taxable profit of the UAE company. This is the overall. So we can just discuss, a resident person could have a PE in another country. This PE will be based on the domestic tax law of that country, and there may not be tax treaty between UAE and the other country. The generally attributed to such foreign PE will be taxed in that country, not in the UAE. In such a scenario, the city law provides an option to the resident person, this resident person, to elect for an exemption of this income in the UAE by making election not to consider the income and associated expenditure of foreign PE in determining its taxable income. The taxable exemption if the tax on the foreign income is at least 9%. These are the conditions. The foreign PE income and related expenses of the foreign PE, it will not be considered subject to the condition that the tax is at least 9% in that respective jurisdiction or country. Suppose the taxable person has elected for this. In that case, the taxable person will not be allowed the losses, expenses, foreign tax credit later. You will not be, if you are claiming this exemption, then you will not be allowed the losses, you will not be allowed the expenses, you will not be allowed the foreign tax credit, which is apple to apple comparison. A simple comparison. If you are not liable to pay tax on the income, then why will you claim the losses, expenses, and foreign tax credit? The exemption where applicable shall apply to foreign PE of the resident that meet the related condition. All foreign PE which meets all such conditions, it will be applicable on all foreign PE. The law doesn't specify whether the election is irrevocable. More clarity might be in the regulations. We need to wait for it. The fourth condition is basically, if this is a resident taxable person has a PE out of the UAE, foreign PE, the resident person can elect that the income and related expenditure of that foreign PE should not be considered if it has been accepted. Then in this situation, the losses, expenses, and foreign tax credit of the foreign PE will not be allowed. And the major condition is the income of the foreign PE is subject to tax at least 9%. It will be applicable on all foreign PEs of a resident person that meet the related conditions. Income from leasing of ships and aircraft. Think like this. This is a USA company. This USA company is operating ships and aircraft. This US company is coming to UAE in the international waters. Once this company is coming to the UAE international waters, then UAE principally, whatever we have discussed, this company is earning income from UAE. It will be considered UAE source income. It will be considered UAE sourced income, though principally withholding tax should applicable in the UAE. And we all know this, that 0% withholding tax is for the time being. But what is the basically exemption on this? They said if the USA or any foreign company is earning any income from the UAE, this income will not be subject to tax, subject to the condition the same privileges are available to the UAE carrier. We know this Etihad, we know this Emirates Airlines, Sharjah, whatever these airlines, if these same exemptions is available to the carriers of ships and aircraft of the UAE in the respective jurisdiction. So USC company will keep enjoying the income tax exemption from in the UAE if the same privileges are available to the UAE carriers in the respective jurisdiction in the respective country. But these are also subject to certain conditions. These conditions are these exemption will be available to UAE carriers in the country entirely in which the non-resident person is a resident and the non-resident person is in the business. Means they are asking this USA company, non-resident person is in the business. What type of business? International transportation of passengers, livestock, parcel, merchandise, or leasing or chartering aircraft, ships, or leasing of equipment which are integral worthiness of ships for the airworthiness of the aircraft used in international transportation. If the non-resident person is doing any of this business and the same privileges are available to the UAE carrier of ships and aircraft in the respective jurisdiction, then the UAE sourced income of that non-resident person will not be subject to corporate tax as well. Okay, frequently asked questions. What income is exempt from the UAE corporate tax? I think we have already discussed in detail. Dividend and profit distribution, dividend profit distribution. This is local resident juridical person, foreign juridical person. Income gains, gain, losses, discussed in detail. Income foreign branch of PU already discussed. Income derived non-resident operational leasing of ships and aircraft in the international transportation. We have already discussed in detail. All our dividend and other profit distribution earned from the UAE juridical person exempt from UAE. All dividends and other profit distribution, dividend and other profit distributions earned from the UAE juridical person. We have already discussed in the first category. If this dividend or profit distribution is being received from the UAE juridical person, it will not be subject to corporate tax. Domestic dividend and other profit distribution earned from the UAE juridical person are exempt from the UACT irrespective of the level of ownership. Agreed? We have not discussed any threshold for our first case. Paying the dividend for profit share. The exemption will also apply to dividend received from UAE juridical person that benefit from CT exemption whose profit. This line is very important. I have already discussed this. I have already told you. It doesn't matter you are getting this. It doesn't matter that you are getting this dividend from the free zone person. It doesn't matter that you are getting dividend from the exempt persons. All these dividends will not be subject to corporate tax. All our dividend and other profit distribution from the foreign juridical person exempt from the UACT. All our dividend and the profit distribution received from the foreign juridical person. This first one are the local resident juridical person. This is a foreign juridical person. This is subject to participation interest if this all condition 5% minimum shareholding intends to held or intends to hold for a period of 12 months subject to tax at least minimum 9%. The person has 5% share in the assets and at least 5% share in the liquidation. The fourth is at least 50% of the participation interest, assets of the participation interest are net exempt if it would have been held in the hands of the taxable person. If all these conditions are being fulfilled, then we'll say this is a participation interest. This participation interest, it will not be subject to dividend, will not be subject to corporate tax. One thing I just wanted to highlight, I think I forgot to highlight it. It was in our first thing. This 5% exemption limit can be reduced as well, unless acquisition, basically minister can reduce that unless the acquisition cost of ownership interest exceeds the threshold may be specified by the minister. This minister can specify the threshold, and if this acquisition cost is more than threshold, but still this is less than 5%, it can be considered as that qualifying interest. It will be assumed that this condition has been met. It has been given in the article 2311 of the law. I think I forgot to discuss. So 5% is the condition, but minister can set a threshold. If the amount is being invested more than this threshold, then it will be assumed that this 5% condition has met. So all the dividend, we have discussed the question number 3 as well. What is the participation exemption regime? The same thing that we discussed earlier. If you wanted to read, we can read it quickly. The background of the participation exemption regime is to prevent double taxation within a group where any underlying group company pays the dividend or transfer the share has already been taxed on its profit. The corporate tax lawfully exempt dividend derived from the UAE entities as well as the dividend from the foreign subsidiaries that qualify as a participation. Participation is a juridical in which the UAE shareholder owns at least 5% or greater ownership interest. This is called participation interest for at least period of 12 months that meet the conditions of the participation exemption regime. Similarly, capital gains on the sale of shares in the domestic and foreign entities would also be exempt from the CT. This is important again. The capital gain on shares are exempt. We have already discussed the capital gain. We have already discussed the unrealized gain and losses. At that time, we have discussed the same thing as well. The exemptions of minimum ownership threshold, duration, and the condition. We have already discussed all these conditions and threshold. Can I benefit from a UACT exemption if I own at least 5% shareholding in a company? Can I benefit from a UACT exemption? Can I benefit from a UAE exemption if I own less than 5% shareholding? We have already discussed this article 2311 condition. Minister can set the threshold. If the investment is more than that threshold, then yes, still you can do this. There can be instances where a UAE business make a strategic investment in another company that doesn't result in a 5% or greater ownership interest. There is a possibility where the percentage ownership in the parties follow below the 5% ownership threshold because of the events outside the control of the UAE shareholder company. To address such instances and reduce the administrative burden associated with monitoring and continued compliance with minimum ownership requirement under the participation exemption regime, the minister may prescribe a certain minimum acquisition cost. We have already discussed. Will dividend paid by the UAE companies be deductible for CT purposes? Dividend is always paid of the after tax profit. If this is out of the after tax profit, then how can we get the exemption? We cannot claim as a deductible expense. We cannot claim as an allowable expense because this dividend is usually paid out of the after tax profit. Faiza, Bahar, Anwar, and Saqib, you can speak to anyone if you are in need of any support. Always ready to listen you, ready to understand, and ready to deliver. Any question, you can drop us an email, info@crestcooper.com. Thank you very much. So coming to the question, if the EFE example you gave for the control and management, if this company's control and management the US legally registered in the KSA, they will withholding tax in other jurisdiction. Yes, but only for USA it will be exempt. Okay, for UAE tax we will be able to exempt. Yeah, it will be for sure. You are very right. He is asking basically, it's a very good question. He is asking. The question is basically the one company in KSA. This company is being controlled and managed from the UAE. If this company is being controlled and managed from the UAE, it will be considered juridical person, resident juridical person. For the resident juridical person, if this any dividend is being received, any dividend is being received, this dividend, it will be exempt for the UAE corporate tax law. But that dividend might be, we need to look into the KSA law, might be that dividend is subject to tax in KSA, withholding tax. The question is, so foreign tax credit will be available. Yes, the foreign tax credit principally should be available, and maximum it should be available to the applicable tax rate in UAE. If I need to look into this again, might be they are asking the using the word applicable tax rate, might be they are using 9% maximum. There is a ceiling I can remember. So if they are asking that the foreign tax credit will be available maximum up to the applicable tax rate in the UAE, then you will not have any exemption, any credit. But if they are asking the maximum foreign tax credit is available to the 9%, then we need to look into this, how much you are paying in KSA and how much you can exemption here again. The question is basically, what is the applicable rate in UAE? If this is principally the most logical thing is, it should be the applicable rate in UAE. If this is subject to applicable rate, we know there is the foreign tax, we know that the dividend received from the foreign juridical person, that dividend received from the foreign juridical person is exempt. So principally government will say this itself is exempt in the UAE, so they will not give you any credit. But we need to, I need to double check it. The law says prevailing market, prevailing tax rate at minimum 9%. What is the meaning of 12 months holding participate? Meaning of 12 months is basically law is asking for a continuous period of 12 months we need to hold it, or intention to hold it for a continuous period of 12 months. Do you have to ensure the participation exemption condition even if the control and management in the UAE? Do we have to ensure the participation exemption condition even the control and management in the UAE? Let's say the entity is legally registered in Cayman. Entity is legally registered in Cayman, controlled and managed from the UAE. So it will be assumed the resident juridical person. So participation conditions, all these participation conditions will be applicable for sure, because this will be entity. No, sorry. This it will be resident entity, but for that kind of discussion, they said foreign resident person, foreign juridical person. It is not a foreign juridical person. This is this entity. Do we have to ensure the participation exemption? Even the control and management in the UAE, if the control and management in the UAE, it will be assumed is a resident juridical person. But this participation exemption is applicable for the foreign juridical person, not the resident juridical person. Any other question? No. If you have any other question, you can ask. Okay, so far as your presentation is concerned, I always forgot. Okay, let me share it quickly here. I have just prepared this and answered. Let me share the presentation here. How can I share the presentation here? Participation. Answer. Allow all questions. Praveen says your way of explanation is really very simple and logical. Really appreciate it, Praveen. Thank you very much. So, guys, I'm trying to share the presentation here. How can I share it? I have finalized it today itself. This is ready to be shared with all of you. So, okay, I have the registered emails. So what I'll do, I will send the presentation on the registered email, on all registered emails. Thank you very much and have a lovely day. Thank you. Bye-bye. Take care. Thank you. Bye-bye.
Thanks for watching the video. Click